Today, July 4th, 2026, marks 250 years since American independence. 250 years ago, this was 13 indebted colonies with no industry to speak of. Today, it's the richest nation in the history of the world, producing more economic output than the next three largest economies combined. So what actually happened in between? That's what we're covering today. This is a big one. 250 years of economic history, the reforms that shaped it, and an honest look at why America became this wealthy. Let's start right at the beginning. In 1776, the newly independent United States was 13 small colonies with almost no industrial base, mostly farms, mostly small towns, and it was deep in debt from fighting a war against the world's most powerful empire. Nothing about the starting point suggested this country would one day be the richest in the world. So what changed the trajectory? Many economists point first to the founding institutions themselves. The U.S. Constitution protected private property, enforced contracts, and even included a clause protecting inventors' patents, encouraging people to build and invent, knowing what they built would actually be theirs. A government that mostly stayed out of the way, but enforced the rules fairly, turned out to be an enormous long-term advantage. Any honest account of early American wealth has to include this directly. For decades before the Civil War, cotton was America's largest export, and that cotton economy was built on the forced labor of enslaved people. This is not a footnote. It's a core, painful part of how early American wealth was actually generated, and it deserves to be said plainly rather than glossed over. Through the 1800s, the country expanded rapidly westward, opening up enormous amounts of land and natural resources. The Transcontinental Railroad, completed in 1869, physically stitched the country together. Goods, people, and capital could now move coast to coast in days instead of months, turning a continent-sized landmass into a single connected market. At the same time, waves of immigrants arrived from all over the world, providing the workforce for the factories, railroads, and farms that were rapidly expanding. This constant inflow of human capital, workers, skills, and often desperate ambition to build a better life became one of America's most underrated economic engines. By the late 1800s, America was industrializing at a staggering pace. Steel, oil, and railroads created enormous new industries, and with them, some of the largest companies and fortunes the world had ever seen. This era wasn't without real controversy, monopolies, brutal working conditions, and vast inequality, but it also built the industrial backbone the country would rely on for the next century. Somewhere around 1890, without much fanfare at the time, the United States quietly overtook the United Kingdom to become the world's largest economy. The empire that had once ruled the seas had been economically surpassed by its own former colony, and America has held that position, nominally, ever since. In 1913, after a series of damaging banking panics, the United States founded its central bank, the Federal Reserve. For the first time, the country had an institution whose job was to act as lender of last resort and steady the financial system, instead of leaving it to chaotic, panic-driven boom and bust. World War I marked a turning point most people don't realize. Before the war, America was a debtor nation, owing money to European lenders. By the war's end, that had flipped completely. European nations owed enormous sums to the United States. America had become, for the first time, a creditor to the world. But the 1920s boom was built partly on speculation and easy credit, and in October 1929, the stock market crashed catastrophically. What followed was the Great Depression, the deepest and longest economic collapse in American history. with unemployment soaring and banks failing by the thousands. In response, the government introduced sweeping reforms known as the New Deal. The FDIC ensured ordinary people's bank deposits so a bank failure could never wipe out their savings again. The SEC was created to regulate the stock market and require honest disclosure, literally the foundation of everything this channel teaches. And Social Security created a basic safety net for retirement. Here's something worth being honest about. Economists still genuinely debate how much the New Deal actually fixed the Depression versus simply stabilizing the system, with many arguing it was really the massive spending of World War II that finally ended it. Both views have real economic evidence behind them. This isn't settled history, and we won't pretend it is. World War II transformed the American economy again. Factories converted to war production at staggering scale, ending unemployment overnight. And crucially, America's mainland was never touched by the fighting. While European and Asian industry lay in ruins by 1945, American factories stood completely intact, ready to supply a rebuilding world. In 1944, the world's major economies met at Bretton Woods and agreed to a new global monetary system with the U.S. dollar at its center, backed by gold. This single decision handed America an enormous, lasting advantage. The world would now conduct its trade and hold its reserves in American dollars. After the war, the GY Bill sent millions of returning veterans to college and helped them buy homes, fueling a historic boom in education and home ownership. Highways expanded, suburbs sprawled, and a new mass consumer economy emerged: cars, appliances, television, creating the modern American middle class. In 1971, facing mounting pressure, President Nixon ended the dollar's direct convertibility into gold. From that point on, the dollar's value was no longer tied to a fixed amount of gold. It floated freely, backed instead by trust in the U.S. government and economy. This is the beginning of the fiat currency era we still live in today. The 1980s brought a wave of tax cuts and deregulation aimed at unleashing faster growth, and by many measures, growth did accelerate. But this era is also genuinely contested. Critics point to rising income inequality and increased financial instability that trace back to these same policies. Both the growth case and the inequality critique are backed by real economists and real data. From the 1970s onward, a new industry emerged that would define the next 50 years: technology. Silicon Valley grew personal computing, and later the Internet, a technology whose earliest roots trace back to U.S. military research. America's combination of universities, venture capital, and risk-tolerant culture made it uniquely suited to turn these breakthroughs into globally dominant companies. As global trade expanded from the 1990s onward, America positioned itself as the world's largest consumer market, importing enormous quantities of goods from newly industrializing countries. American consumer demand became one of the primary engines driving global economic growth for decades. In 2008, a collapse in the housing and mortgage markets triggered the worst financial crisis since the Great Depression. The Federal Reserve and U.S. government responded with massive interventions, bailouts, emergency lending, and eventually years of near-zero interest rates, reshaping how central banks around the world respond to crises ever since. In the years since, a small handful of American tech companies grew to become some of the most valuable companies in human history. And most recently, the AI boom, powered by companies like NVIDIA, has driven a new wave of American economic dominance, this time built on chips and data centers instead of factories. Most recently, the COVID pandemic triggered enormous government stimulus, followed by the sharpest inflation spike in over 40 years, peaking at 9.1% in June 2022. It was, in miniature, a test of everything we've covered: money supply, central bank response, and the delicate balance between supporting an economy and overheating it. So, pulling all of this together, why is America actually this wealthy? There's no single answer, and reasonable economists weigh these differently. But the factors most commonly cited are strong institutions and rule of law, the deepest capital markets in the world, over 2 centuries of immigration bringing in talent and labor, an unusually strong culture of innovation and risk-taking, and the enormous quiet advantage of controlling the world's reserve currency. None of this means the story is finished or uncomplicated. Rising income inequality, a growing national debt, and a dramatic new wave of tariffs, introduced in 2025 and 2026, are all live, contested debates about where the American economy goes from here. This success story comes with real, unresolved questions attached. As of 2026, the U.S. economy stands at roughly $32.4 trillion in nominal GDP, about 26% of all economic output on Earth, still comfortably the world's largest economy by that measure, even as China has grown to become the largest when measured differently, by purchasing power. Let's pull 250 years together. Strong institutions and the rule of law gave people the confidence to build and invest. Immigration and industrialization built the workforce and the factories. World War II and Bretton Woods handed the U.S. dollar the world's reserve currency status. And deep capital markets, alongside a genuine culture of innovation, kept compounding that advantage for decades. 250 years on, it remains the world's largest economy, with very real, unresolved debates about where it goes from here. 250 years of history, and it all connects back to exactly what this channel is about: the markets, the money, and the decisions that shape them. Understanding this history is understanding why global capital still flows to American markets today. We'll keep building that understanding, one episode at a time. If this gave you a genuinely deeper understanding of how America became the world's richest nation, please hit that subscribe button. It's completely free, and it's the single biggest way you help this channel grow. Happy 250th, and see you in the next one.